Hey everyone, this is Dr. Duru from Ahan Analytics with the market breadth. All right, let's dive into it. It was a record-breaking week. Timestamp is soon after the market closed on July 25th. Let's run through some of the headlines. Okay, I wrote about this on a Seeking Alpha article. There are a lot of headlines actually now with the market just kind of melting up higher. There are a lot of distractions. So, for instance, this thing here about dropping capital gains from home sales, there's nothing to see here. We're so far away from anything happening on that. There's no point in trying to trade or invest on this news. There was an attempt to do so earlier this week. And again, like I said, I wrote about it on my latest Seeking Alpha article. This is very interesting to me, the man behind a Toronto hedge fund that revived meme mania. I read these more for entertainment value because sometimes people float narratives into the press that, prop up a particular agenda. This article should be interesting, but I doubt there'd be anything to trade off of here. If nothing else, it's to just attract more people into this crazy mania trade. In case you haven't heard what's going on, it's now I just found out that there's a on Wall Street Bets, I guess there's an acronym called DORK, which stands for the four stocks that are really at the core of the latest meme mania. Don't Krispy Kreme, which is ticker symbol DNUT. The O stands for Open Door, which is a ticker symbol OPEN. R is for Rocket Companies. I think it's Rocket Companies, Rocket Holdings. Ticker symbol RKT. I actually already happen to be a holder in Rocket, and I just missed the opportunity to sell calls into that mania. And then the K is for Coles, ticker symbol KSS. Check out those charts if you want. I'm not going to spend any time on those. The madness is real out there. Okay, just a bunch of tariff headlines here. The market essentially doesn't care about these tariff headlines anymore. And as you can see, the pages are just splattered all over the place with them. But if they happen, they happen. If they don't, they don't. The market is just trading higher. Okay, let's jump into the charts. Favorite technical indicator, percentage of stocks trading above their 50-day moving averages, what I like to call AT54 above the 50. Same old story, continues to pivot around the overbought threshold, which is at 70%. It closed the week at 69.5%, which is just below the threshold. The indicator got above that threshold for one day out of the week. I hate to do this. I've been trying to hold off, but we are officially in a bearish divergence, but it's not an actionable bearish divergence. So, what does bearish divergence mean? Well, the major indices just keep pushing higher, but market breadth is no longer following along and confirming those all-time highs and the push higher. And it's even more stark if I check out the percentage of stocks trading above their two-day moving averages, what I like to call AT200 for above the 200. You could see that it spent one day above this line that I drew here that shows the level of AT200 in the last time the S&P 500 hit all-time highs earlier this year. And it looks like, it broke out, which was great. It confirmed Wednesday's move, but then it dropped right back below. So this is now a double confirmation of a bearish divergence. But like I said, there's nothing actionable here because the market is in melt-up mode, and there's just no way to tell that momentum has ended while it's in melt-up mode. So there are other technical um, indicators that could flash, but we have to wait and see them happen. We can't try to predict or anticipate them happening. Most of technical analysis is about reaction, not about prediction. And I'm definitely in the reaction camp or category. Okay, so let us take a look at the indices. So S&P 500, let's go to logarithmic style. You could see this melt up. You could see let's see, yep, the S&P 500 just gained every single day of this week. Um, Notice how, and actually let me change this from a question mark top to just bearish engulfing. What I like to say is once a a topping bearish technical signal gets invalidated, that's a buy signal. That's exactly what happened here. The bearish engulfing top was invalidated last week, Thursday, July 17th. I actually forgot to write specifically about that invalidation, but you could see the result, right? The top is invalidated, and now the buyers have a clear runway to just keep pushing things higher. So that's just the main story. The default or the path of least resistance is just up until it isn't. Okay. All right. NASDAQ, same deal. It's even more consistently trading higher and melting up. Actually, ever since this clean breakout, right? Back here on June 24th, it's just been a steady melt up. So, one thing I want to note is that we are entering the seasonally weak period of the market, which is August through October. And seasonally weak just meaning that when drawdowns happen, they tend to be the biggest during those months. It's not that a bearish market is we're at a higher risk of hitting a bearish market. It's just that if the market pulls back, the drawdowns tend to be the highest of the year. Now, of course, we had a huge drawdown back in April, so I highly doubt we're going to get anywhere close to that kind. But just keep an eye out and just expect it as just part of normal market behavior if we get some kind of deep pullback, 2, 3, even 5%. And as you can see, I mean, that kind of pullback only gets the major indices, maybe back to the 20-day moving averages of the dotted line, which is this nice uptrend. And at the worst, it takes us to the support at the 50-day moving average. Either one of those could be buying opportunities depending upon your timing horizon. And just as a reminder, I provide this information for educational purposes. Please invest and trade according to your own risk tolerances and time horizons. Follow, click on the subscribe if you want more of these videos. Any questions or comments, put them down below. And of course, I appreciate likes and shares so the algorithm knows what's up. Okay, let's go to the small caps IWM, iShares Russell 2000 ETF. It's in its own kind of um, melt up, but it's very choppy, right? I mean, IDOM closed the week at $224.38, which is still right in line with where it closed. What was this, 2 weeks ago? So the 20-day moving average shows that yes, the uptrend is still up. The immediate short-term uptrend is still up, but it's just churning and churning and churning. Unlike previous weeks, I did get into an IWM play. It's a calendar call spread. So the weekly expired harmless today, and I'll be writing the long side next week, I hope, to higher prices. Okay, this was the first big week of earnings. So there are a multitude of charts that I could go through. I will have more charts than usual. So bear with me because I think there's a lot of good stuff here, okay? At least for technicians. IBM. This was a big down day for IBM. It crashed, I shouldn't say crash, it collapsed 7.6% post earnings, dropped below 50-day moving average, which is the red line. But you can see here that buyers picked up IBM off the lows yesterday and today. So I think this IBM is actually going to be a buy for me on the first close higher in the post earnings trading period. And my target, of course, will be a rally back to resistance at the 50-day moving average. And of course, if you're a longer term, as a longer term investment, I keep saying IWM, IBM looks great on a tested 200-day moving average. I mean, look at this. I'm pulling back. IBM has just been a winner for once. It's finally a winner since it broke out back here in late 2023. Okay, so I know that I believe the earnings disappointment was in their consulting business, and that's to be expected. And I wouldn't be surprised if the next earnings IBM gains because consulting wasn't as bad as usual. Okay, Intuitive Surgical, ticker symbol ISRG. I finally had to let go of this one. This was so painful for me to do so, but the earnings reaction was very bad. ISRG actually gapped up at first, but then faded. That's a very bearish response to earnings. It ended up losing on the day just 1.8%, but then the sellers followed up the next day, punched ISRG, I say ISRG, ISRG below this low where Deutsche Deutsche Bank downgraded it to a sell and a $440 price target. So I have to respect the price action and just get out. I wanted to hold this stock for the long term, but the technicals aren't cooperating with me. I'm fully willing to dive right back into ISRG once it gets above the converge resistance at 50-day moving average and the 200-day moving average. I did a quick short on Chipotle Mexican Grill, ticker symbol CMG. I just want to post a really quick update. I went ahead and bought additional shares because of this nice pop the next day. Oh, sorry, the next day is today. It gained 2.23%. It's a little risky for me to add on because it's not a confirmed bottom by any means. But like I said, I'm holding Chipotle for the long term. And I think a few years out, I'm really going to be happy that I held on and added on pullbacks. Okay, let's keep it moving. ASML, this is a semiconductor equipment manufacturer. ASML Holding, you could see that it's in bearish territory. It broke down below its 50-day moving average after earnings for a big 8.3% loss. Sellers pretty much have kept control. Even this rebound you see here, actually, let me zoom in a little bit, got stopped cold right at 200-day moving average resistance, and today it fell another 1.9%. I'm not going to short this, but I do like to keep my mental monitoring on top of the stocks that the market is bearish on. So ASML goes into that category. It's fully bearish. If it closes lower again, I could be tempted to short it, but to me, the semiconductor stocks are very volatile and can pop up and down at any time. Toyota Motors was a big one this week because Japan signed a trade deal. All the details are not quite clear yet, but it's clear enough for Toyota Motors to surge 13.6%. This is one that caught me off guard. I had no idea that tariff, tariff drag was holding a stock like Toyota Motors down. If I had noticed this, I sure would have bought into the lows around here, but it is what it is. And this is just something to note. It gapped down today 1.7%. So the euphoria over the tariff news is already starting to wear low. I am not a buyer or seller or shorter of Toyota Motors. Here's the stock that I finally had to sell. Freshworks, I was really optimistic that it was going to break out and hold this breakout above the 200-day moving average and the 50-day moving average. But it broke back down, and I just rushed to sell to preserve my last bit of profits. I bought the stock. Actually, I don't quite remember where I bought it, but it was somewhere back in here, such that when I sold it, I just barely preserved a little bit of profit. You could see that Freshworks, they're like an AI. They produce some software for, I think, AI data management, but regardless, you can see that the stock's technicals are very poor now. It rallied to 50-day moving average resistance, fell back, and now earnings are coming up next week. Just no reason for me to risk it. But again, if it has a good earnings day, I will happily buy it above technical resistance again. All right, Netflix was an interesting one. Netflix is actually, believe it or not, bearish. It fell 5.1% post earnings, and sellers have stayed in control. They confirmed the 50-day moving average breakdown, and Netflix is bearish. And the guy that had been bullish on Netflix a long time on CNBC actually came out and gave the case. He's not shorting Netflix, of course, but he did say that, look, Netflix is way overvalued and it's probably going to go a little lower. Again, I don't want to short this one because Netflix has been a winner for so long, and this 200-day moving average uptrend is so nice and so strong. I'd rather just stay on top of the technical action and see whether I can sneak in a buy around the 200-day moving average resistance. You could see Netflix is kind of on track to, if it does get down that far, it's on track to hit 1,000 or so, which would be a nice round number for a technical test of 200-day moving average support. Let's go to Caterpillar. I often like to use this as a confirmation of bullishness or to hedge my bullishness by buying puts on Caterpillar. I haven't really had an opportunity to do so because Caterpillar has just been as strong as the market. In fact, even stronger. You can see how steep it's been rallying off of the April lows. and it just keeps pushing higher most of the time. So CAT is as bullish as can be. I cannot wait to see whether it can hold this in earnings. I think it's coming up in at about 2 weeks. All right, here's another stock I had to just bail on. This is Sarepta Therapeutics. An analyst came on CNBC, making a strong case to claim that Sarepta is worth nothing. I was only in this for a bounce, and I just am not interested in speculating on whether or not this is going to go to zero or not. So fortunately, the put that I sold, I was able to take a small amount of profits, but I did have to take a loss on my shares. So that's Sarepta Therapeutics, ticker symbol SRPT. I am out, and I don't think I will ever get back into this stock ever again. All right, Dow Chemical, ticker symbol DOW. Actually, sorry, I guess they dropped the chemical from the name. It's just Dow Incorporated. I was surprised to see how badly Dow has been doing for so long. It last peaked in 2024 around 60, and it's lost, I don't know, what is this? Not quite two-thirds of its value, but maybe about, a little over half of its value. Yeah. And then it fell again post earnings, 17%. I think they complained about tariff overhangs and so on. And I believe, okay, it didn't quite break through. Yeah, it did. It broke through the lows from last April. So now I have to peel back and see just what kind of, yeah, that's what I thought. It's back towards the lows of the pandemic. So I am on watch for Dow as a contrarian play, but definitely not right now. I'd rather wait until it breaks out again above actually its previous low, which is around 2647. So I need to remind myself to set an alert there. So that was surprising to me. I don't think I've even looked at Dow's chart in forever. Now, on the positive side, we had Las Vegas Sands, ticker symbol LVS. I really missed out on this one. It had a nice breakout above the 200-day moving average here and has been bullish ever since. It had a nice fade back to 20-day moving average support, and from there it rebounded into earnings and past earnings. Of course, this is not something I would have speculated on before earnings, but now Las Vegas Sands, ticker symbol LVS, has confirmed its bullishness and seems ready to keep higher. I wrote about this before. It's kind of tough to really get too bullish on LVS. There's resistance that's waiting for it at 56. And then if you peel back, let's say we go on the weekly chart, it just has gone nowhere for a long time. I mean, for almost this is practically a generation. So this is definitely a stock. I've written about stocks that are rentals. This is definitely a rental type stock. You hope to buy it at a low point and then you sell it at the top of the range and just be happy that you made a good trade. All right, Google. This was interesting because Google traded down post earnings in the after hours, but then gapped higher the next day, and then it faded back down again. I think the market is just confused as to how to interpret the earnings. I think that, Google is still bullish, but of course, it's in a position where you have a high risk of a pullback to at least the 20-day moving average support. So I'm not a buyer, but I'm also not a seller. I do want to keep this on my monitor to see whether a lower entry point materializes. In the meantime, you can see here that Google is essentially slowly but surely, painfully trying to fill this gap lower from its January earnings. So it's almost there, but it's just taking its sweet, 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 sweet time. If you're a long-term holder, just hang in there, and I'm pretty sure it's going to fill at some point. At least that's just my guess. Okay, so I did talk about the meme stocks are back. So when meme stocks are back, I like to take a look at oldies but goodies and just to confirm that people are scraping the bottom of the barrel looking for anything to push higher. Sure enough, here is GoPro. GoPro wasn't even above $1 going into this week. If I were watching the technicals, I would have seen the technicals on GoPro. This is ticker symbol GPRO. In case you don't remember from the old days, GoPro was all the rage. It's a camera, it's an action camera that you can strap into almost any outdoor environment. It had this nice breakout about 200-day moving average, and then it was off to the races. So let's look at this. It closed at 96. Let's just call it $1 just for easy math. And in 2 days, it gapped up to $2.30. So more than doubled, almost two and a half times in just 2 days. And then, of course, it's well extended. It's well above and stretched really high above its upper Bollinger Band. So it's subject to a fade, and that's exactly what the sellers did. They just kept taking their profits because you can imagine anyone who happened to buy any time in the last several weeks or months was all too happy to take profits, and they just overwhelmed the stock completely. This is a very bearish gap and crap pattern, gap higher, crap going down way lower because you can see, I mean, this is a huge range from 230, around 230 down to 150. That's massive, massive, massive. It's stabilizing, so that means there could be one more, at least one more bounce, but I'll be highly shocked that it can get above this gap high without some sort of positive news catalyst. So just wanted to show you that it's not just the dork stocks, so to speak. It's a lot of stocks that are in the single digits that folks are rushing to push around. I wouldn't be surprised to see GoPro still has a high short interest because I don't know why, but there are a lot of greedy shorts that just like to hang around in the stock until it finally goes to zero or bankrupt. I'm just going to pull back here just so as a reminder of just where this poor stock has been. This is the weekly chart. You can see GoPro at one point soon after its IPO was at 97. So it's been a complete 99% washout. So this is just not a stock to invest in. It's only for rental speculation. Again, unless some new catalyst comes along, which I don't know or suspect could happen. All right, let's go back to the semiconductors. Texas Instrument Incorporated, TXN, like ASML. This is a semiconductor that is now bearish. It lost a whopping 13.3% post earnings, sliced a gap down below its 50-day moving average, and sellers kept pushing it below the 200-day moving average. So this is doubly bearish action. This is one I might actually short just because Texas Instruments moves slowly enough that I don't think there's as much risk to shorting TXN, but I would definitely want to short on a rebound and not chase well below the lower Bollinger Band. All right. Now, Uber. As I've talked about and written about before, I now have been converted finally on Uber. I'm trying to hold shares for the long term. I really have liked the price action. And Uber is holding right now 50-day moving average support. So this is really nice. So I went ahead and added to my core position in Uber and got a call. I think I got a call spread. And so we'll see what happens. Who knows? But I am really a fan of Uber now. I really like the breakout. I like the way it's holding that breakout, even though it is trading below the previous high. As long as it's holding the 50-day moving average, it's great for the short term. And definitely as long as it holds its 200-day moving average, it's great for a longer term. What I don't like quite as much as how it trades in tandem with Tesla's fortunes. It's almost been a semi or quasi inverse Tesla type of stock. And that's not why I'm buying it at all. All right, here's one I'm really happy about. Cheekily, I like to call this glowworm because of the ticker symbol is GLW. The company is Corning Incorporated. I wrote about this. I can't remember, is a few months back at least, when I saw news about a deal they did on fiber optics for AI data centers. And that just reminded me, oh, I totally forgot about this stock. I rushed to buy it. So glad I did. You could see like a lot of these type of AI component stocks, it's had a nice rebound from the April lows and has just continued to grind higher. First test is next week with earnings. I'm going to be on the edge of my seat, hoping that Glowworm can continue the rally higher. You can see how strong it's been for a while. It ended a downtrend at the end of 2023. So I'm hoping, and it's actually the valuation is not so bad either. So I'm hoping to hold this one for the long term. All right, CrowdStrike. This is one that, I've completely missed. I mean, it had this really bad drop during the outage. I was a skeptic that it could recover quickly. It did, and it's become a very bullish stock since then. Missed another opportunity to buy it during the tariff drama, trauma, and noise. CrowdStrike had nothing to do with tariffs, so this was an obvious buy if I had been paying more attention, particularly after it recovered 200-day moving average support. So anyway, it is what it is, but for whatever reason, cybersecurity stocks weakened a little bit this week, and CrowdStrike dropped below its 50-day moving average, so it's not a buy for me here. Definitely want to get into this if it breaks out above the 50-day moving average. And if the weakness just so happens to continue long enough, I'm definitely don't want to miss another test of 200-day moving average support, which would be around 400 at this current pace, which is again a nice round number, and it gets it close to the former all-time high, which should also be another firm support. All right, we're down the stretch now. I have the home builders, I believe. Yes, home builders. And I wrote about this also on Seeking Alpha. Just wanted to point out that that my read on the trading action was pretty spot on. The pullback is in, and if I didn't have any home builders already as a trade for this, what I'm calling the bearish to bullish reversal, I would be a buyer right here. Sorry, on the next close higher. What Swing Trade Bot likes to call a calm after the storm move is building here. Calm after the storm means the storm is this huge. What is this? 17% post earnings rally on DR Horton, ticker symbol DHI. A pullback that cools things off. And in fact, very neatly, it pulled back to the open on the post earnings day. And now you can see that the sellers have completely lost momentum. People who wanted to take profits on this move are now maybe exhausted. And now the runway could be clear for it to go higher. Let's take a look at Pulte Homes, which is also a benefit of the surge. You can see similar kind of action here, right? And again, like I said, I would be a buyer here, and definitely I would be in accumulation mode. I would be buying on the next close higher, or I would be buyer right here on Pulte Home, ticker symbol to PHM, if it tested this converged support at 200-day and 20-day moving average. And just as reference point, ITB, which is the iShares US Home Construction ETF, is following the exact same pattern. Unfortunately, it stopped cold right at 200-day moving average resistance. I have a large core position in ITB, so I'm really looking forward to a breakout at some point on ITB. All right, everybody. I think I've gotten through all of the charts. Like I said, this was only a small sample of what I could have shown. Oh, wait, there's one more. Albemarle. Yes, Albemarle. It's got earnings coming up, so I'm not going to make a trade on this, but I am a holder, and I really like this 200-day moving average breakout. It's very bullish, so I'm just going to hope that this is a harbinger of good things to come for earnings. As I always like to warn, technicals are not a great signal for what's coming in earnings. You have to really know a lot more before you try to trade on technicals ahead of earnings. I love trading on technicals after earnings, though. Okay, so that's Albemarle, ticker symbol ALB. They are in lithium, which is, of course, powering the new economy, the new electric economy. All right, so that's it for today. I know I went a little long. If you made it this far, thank you very much. Hopefully that means you're a subscriber or you're interested in subscribing, so please do so. I will be writing more details, of course, on my blog, drduru.com/122. See you the next time. Have a good and safe weekend. Again, the theme um, for this week and coming weeks is we are officially in a bearish divergence. And we are in a bearish divergence going into a seasonally weak time of the year. So a pullback must be expected. We may not get one, but a pullback is not going to be a sign of bearishness. Okay. And I'm not trying to time a top in the market unless there is some other strong technical signal that would get me to try to do so. But that is not my base case. Okay. All right. Have a good one. Take it easy. See you the next time.